The S&P 500 just crossed 7,000 points, an all-time high, a number nobody thought we'd see this year. And yet, there's a naval blockade in the Middle East. Oil is sitting near $100 a barrel. The ceasefire with Iran just got extended by one man, unilaterally, hours before it was set to expire. Peace talks haven't even started. One of these two stories is lying to you, the market or the news. Both can't be right. Here's what's actually happening, and why I think most investors are about to get caught on the wrong side of this trade. First, the bull case. The reason the market keeps climbing. Morgan Stanley just said the Magnificent Seven is projected to grow earnings by 25% this year. The other 493 companies in the S&P, 11%. So when you look at the market hitting all-time highs, what you're really seeing is 7 stocks carrying the entire index on their backs. Nvidia, Microsoft, Apple, Meta, Amazon, Alphabet, Tesla. That's it. That's the rally. Meanwhile, the broader economy is showing cracks. Retail sales look strong in March. But dig into the numbers and most of the gain came from people paying more for gas and groceries, not buying more stuff. Inflation dressed up as growth. Quick question before I keep going. Are you still buying this rally, or are you sitting in cash waiting for the drop? Drop your answer in the comments. I actually read them. Now here's what's got me worried. The Strait of Hormuz is still closed. 20% of the world's oil flows through that waterway. Every day it stays shut, the risk of an oil price shock goes up. And Trump just said he's not removing the blockade until Iran signs a deal, which Iran is currently refusing to do. If oil spikes back to 115 like it did in early April, the Fed can't cut rates. Inflation comes roaring back. The AI trade that's holding this entire market up starts unwinding fast. And there's another problem nobody's talking about. Jerome Powell's term as Fed chair ends on May 15th. Trump's replacement pick, Kevin Warsh, has a 30% chance of being confirmed by then according to prediction markets. 30%. That means the Fed is about to hit a leadership vacuum right as geopolitical risk peaks. So the question isn't whether there's a disconnect between the market and reality. The question is how long the disconnect lasts before it snaps. My take, this is a melt-up, not a breakout. Retail is piling in because the market keeps going up, feels safe. Institutions are quietly trimming positions. We saw the same pattern in late 2021 before the 30% drop in 2022. Same vibes, same denial. Here's what I'd be doing if I were making moves right now. Not financial advice, just how I'm thinking about it. Keeping more cash than usual, staying in quality names with real earnings, and not chasing whatever stock is trending on social media this week because those are the ones that drop 60% first when sentiment flips. Real question for you, if the ceasefire breaks next week and oil hits 120, what's your move? Are you buying the dip or going defensive? I want to hear your actual strategy, not theory. Drop it below. Because here's the thing about market tops. They always feel the most obvious in hindsight and the most impossible in the moment. The S&P at 7,000 while the Middle East is on fire is not normal. It's not bullish. It's a warning. Pay attention to what the market isn't saying. That's where the money gets made.